According to the website www.cbrates.com, there have already been 242 interest rate increases from central banks around the world this year, more than that seen between 2018 and 2021 combined. And the odds are we'll see a few more in the coming week. The key points of interest will be the degree and any forward guidance on future policy moves, as central bankers in Australia, Canada, and the European Union try to regain the initiative in the fight against inflation now that their prior talk about the resurgence being transitory has proven, so far at least, to be absolute nonsense. Philip Lowe will announce the Reserve Bank of Australia's latest move on Tuesday, the 6th of September. 4 rate hikes have taken the cash rate to 1.85%, the highest figure since spring 2016. A further quarter point rise is expected by economists at this meeting to take the headline rate to 2.1%. Tiff Macklem will then announce the Bank of Canada's decision on Wednesday the 7th. Having jacked up the headline rate by 1 full percentage point in July, Mr. Macklem is expected to follow that with another half-point increase. That will be the 5th hike of the year and take the Bank of Canada's base rate to 2.5%. Then we get the European Central Bank on Thursday the 8th. The ECB was late to the party as it announced its first interest rate increase of the year and in more than a decade, only in July, although President Christine Lagarde did at least move the headline refinancing rate by half a point to 0.5%. ECB officials were particularly hawkish at the Global Central Bankers meeting in Jackson Hole, Wyoming in late August, and there has been talk of a 0.75% increase at the coming meeting. However, the consensus view from economists is that Madame Lagarde will approve a 0.5% increment to 1%. Economists and investors will also look to Madame President for further details on the plans for quantitative tightening, especially as she rather fudged the issue at July's ECB meeting by talking of, quote, an anti-fragmentation mechanism designed to help the more indebted southern nations should bond yields start to rise as QT kicks in. If that talk was designed to reassure, well, it didn't really work, at least if the euro's any guide. The single currency has continued to drop like a rock against the dollar, and in late August, $1 was briefly worth more than €1 for the first time since 2002, as the combination of the energy crisis, inflation, and recession worries took hold and worked against the euro. Back on the home front, we've a busy slate of scheduled corporate announcements from large, mid, and small caps alike, including around half a dozen members of the FTSE 100. Names which may be worthy of further research include the following, although do note that some of these dates could yet be subject to change. So on Monday the 5th of September, we have Decra Pharmaceuticals and Beaver. Then DS Smith, Barclay, Michelmersh Brick, Gamma Communications and STV on the 6th. Barrett Developments, WH Smith, Halfords, Bakkavor and James Fisher on the 7th. Melrose Industries, Vistry, Restaurant Group, Dark Trace and Genus on the 8th. And PZ Cussons and Funding Circle on Friday the 9th of September. But the company which could really cause a fuss in the week ahead is Ashtead. The equipment rental specialist is due to report its first quarter results on Tuesday, the 6th of September. This could be a key test for shares in the FTSE 100 company. Even after a good run in the wider summer rally, Ashtead's down by more than a quarter over the past year, to rank it 62nd in the FTSE 100 over that time span, by the way, thanks to fears of a global economic slowdown. Ashtead gets 80% of its sales and 90% of its profits from America, with the rest coming from Britain and Canada. Analysts and shareholders will look at these first quarter numbers in light of the guidance for the full year given by Chief Executive Brendan Horgan alongside June's full year numbers. Then, Mr. Horgan targeted revenue growth of 12 to 14% in constant currencies, with Canada growing by 15 to 18%, the US by 13 to 16%, and the UK shrinking by 2 to 5%. Analysts are currently looking for 12% growth in sales for the year as a whole to $8.9 billion US dollars, and the benchmark for the first quarter is last year's figure of $1.9 billion in sales. In terms of profit, Ashtead made a stated pre-tax profit of $416 million in the first quarter last year and an adjusted one of $437 million. For the year as a whole, analysts are looking for 17% growth in pre-tax profits to $2.1 billion, despite those concerns over recession, supply chain fractures, and input cost inflation. More strategically, the results will be studied in the context of the Sunbelt 3.0 strategy launched by Mr. Horgan back in July. This is a 5-point plan based around expanding the US footprint and improving performance in the UK, driving cross-selling in specialist equipment niches, advancing the technological value add of the business, embracing and benefiting from sustainability via an environmental, social and governance or ESG drive, and also rigorously allocating capital, with new equipment spend coming first, then acquisitions, then dividends, and finally share buybacks with any spare cash, all the time while protecting the balance sheet. In terms of how we can quantify what these plans means, well, Ashtead intends to add 298 US greenfield sites to its network by 2024 to take the total to over 1,200. It plans to improve profit margins in the UK. Capital expenditure on new fleet equipment will be between $3.3 and $3.6 billion in the current year to April 2023, well ahead of last year's $2.4 billion. Ashtead acquired 25 firms last year at a cost of $1.3 billion, so watch out for that. And the company's also been running a £1 billion share buyback programme over a 2-year period. Last year it spent £302 million, and the programme continued at the very least through the first quarter. Ashtead probably won't make any comment on dividends until December's first half results. I hope that you and your families are all in good health and good spirits. Thank you for watching, and I look forward to seeing you again next week.